हेलो गाइस, वेलकम बैक टू आदित्य फाइनेंशियल इनसाइट। तो गाइस, इस वीडियो में हम NISM सीरीज 15 रिसर्च एनालिस्ट सर्टिफिकेशन कोर्स में हम चैप्टर नंबर 7 से शुरुआत करेंगे, जिसमें कि हम कंपनी एनालिसिस है, बिजनेस एंड गवर्नेंस के बारे में पढ़ेंगे। तो लर्निंग ऑब्जेक्टिव में देख सकते हैं, इसको पढ़ने के बाद हम लोग क्या क्या सीखने को मिलेगा। तो रोल ऑफ कंपनी एनालिसिस देख सकते हैं, डिफरेंट काइंड्स ऑफ बिजनेस मॉडल, प्राइसिंग पावर एंड सस्टेनेबिलिटी ऑफ प्राइसिंग पावर, critical success factor of a company, competitive advantage and differentiation, at analysis, how to understand quality of management and governance model of company, why it is important to understand the risk to a business, important of knowing history of credit rating of a company and change over time, ESG framework for company analysis। तो देख सकते हैं, अब हम शुरुआत करते हैं गाइस, रोल ऑफ कंपनी एनालिसिस इन फंडामेंटल रिसर्च। तो रोल ऑफ कंपनी एनालिसिस इन फंडामेंटल रिसर्च से शुरुआत करते हैं। एज मेंशन इन चैप्टर 4, इन्वेस्टिंग इन शेयर involves careful and through analysis of a company business. However, a company is only a micro unit in its industry and in turn in economy. Their fortune will be driven by external conditions, including overall macroeconomic factor and industry specific factor. Although these external factors affect every company in the industry, how an individual company performs also depends a lot of company specific factor. Thus, when an analyst understands how an economic is performing and how a particular industry is likely to prosper, they have to find analysis to company specific question, which is include the following। तो देख सकते हैं इसमें क्या क्या है। व्हाट इज अ कंपनी बिजनेस, कंपनी का बिजनेस क्या है। सबसे पहले, एज मेंशन इन सेक्शन 6.2, दिस क्वेश्चन डिराइव आवर डेफिनेशन of the industry. As an analyst should understand this at the very beginning. What is the company business model? कंपनी का बिजनेस मॉडल क्या है। Does the company enjoy any competitive advantage compared to the competitors? Does the company have the necessary capability to exploit opportunity to withstand any threat? Is the company management competent enough to identify and execute the appropriate strategy? Does the management have a vision for a company futures, and are they able to provide visibility into the expected short-term performance and long-term goals? Does the company have the necessary governance structure that the board and management will act in the best interest of the company and its shareholder? Are such governance structure properly implemented and executed? As an analyst tries to find answer to this question, several follow-up questions may arise. To understand the company generate details, analysts should ensure that they go to the depth to find the relevant answer rather than accept superficial answer. Although many of the questions listed above are quantitative in nature, analysts should try to obtain the necessary data that substance their finding. Understand business and business model. Equity investing is all about part of ownership in a business. Therefore, it is important to understand the business model of the company before investing in it. Accordingly, a starting point of qualitative research on any business has to question such as what does the company do and how do it to do, who are the customers and why do customers buy those products and service, how does the company serve these customers. Almost all successful fund managers are never tried to repeating this through that one must invest only in such firm where one understand the business. In checklist of research, this is one of the most prominent question. Do I understand a business? Do no analyst should move to next question. If he and she can't address what a company does in line with precision and clarity, they are over 400 companies listed and active on Indian exchange. It is not possible to track and understand all of them. Investors should consider buying shares of a few companies they understand rather than invest in number of companies they don't understand. Quoting Warren Buffett, wide diversification is only required when the investor do not understand what they are doing. Further, each sector has its own unique parameter for evolution. For the retailer sector, footfalls and same store sales are important parameters, whereas for the banking, it is net interest income, net interest margin. For the telecom, it is average revenue per user. For the hotels, it is average room traffic. Analyst must possess an in-depth knowledge of the sector build researching company. Further, each company will have its unique way of doing business. The efficiency with which product and service are produced and delivered to the customer may vary from one business to another and will significantly impact its earning. Therefore, it's become imperative for analysts to understand the entire business model of the company. It is relevant to quote management guru Dr. Gary Hamel. Competition in the marketplace is not between product and service but between business models of the competition company. तो देख सकते हैं गाइस, pricing power and stability of this power, sustainability of this power. A key factor to look while studying the business of the company is its pricing power, as that would help a company maintain and grow its profit margin. Pricing power refers to company ability to independently determine and charge the price of product. Company with a strong pricing power would be able to pass on any escalation in input cost to customers. They can also increase their pricing when a demand is strong, thus grow their margin. Most often, pricing power is driven by the industry factor that affect all companies in the industry. These factors include the competition entities in industry, the pricing elasticity of the product, and the level of commoditization of the product. However, there are certain company-specific factors that position a company different from its peer company-specific factors including its natural leadership position in the industry, brand affinity among customers, and its cost base. For instance, several petrochemical products, a smaller player in the industry pricing their product based on the price set by the Reliance industry, as it is seen as the natural industry leader. This allows Reliance the ability to independently price their products. Similarly, a company with a strong brand perception, brand loyalty is likely to be able to price their product independently. Low cost base help a company to keep their pricing low without having to worry about competitor following suit. A reducing pricing may not be financially viable for the latter who have higher cost base. Studying this is very critical to understand which industry like to do well and which player is an industry like to outperform its peer. Competitive advantage, point of differentiation over the competitors. In every industry, some players do better than others. Therefore, an analyst try to understand how a particular company is likely to perform in future. They need to understand how the company is likely to perform vis-a-vis competitors in the industry. The differentiating factor for a company compared to competitors can be characterized into three: differentiation in product feature, competitive pricing driven by the operational efficiency, better execution, product differentiation में देख सकते हैं one way in which a company can outdo its competition is by the incorporate better feature in product that would appeal to its target customer group. The differentiating feature can be in the term of product quality or its functionality. This would help them recreate value proposition of their customers and is likely to help company attract more customers and competitors in order to able to execute this strategy. A company should have a strong research and development team and a culture of innovation. In a highly competitive industry where many players are constantly engaged in introducing new product, the leadership position may keep shifting from one player to another. However, हालांकि those with a strong innovation will be able to outperform those who lag in their department. An analyst therefore need to compare the product of the company with that its competitor to see if they have offer better feature. It is important for the analyst to look at the data that can sustainability the advantage and not get carried away by the superficial marketing claim. Competitive pricing देख सकते हैं. Another way a company can compete better with their competitors by pricing their product competitively. If customers perceive product of many company to be similar in nature, they are likely to prefer products that are priced at a lower in as compared to those that are priced at a higher end. However, competing by the keeping the price low is sustainable only if the company has low cost advantage. Otherwise, competitors would be able to mimic the company strategy and reduce their price as well. However, if a company cost is lower than other players, then it can sustain a low price advantage. Competitors would not be able to sustain a price that is lower than cost. Price differentiation are easy to solve in an industry that produces highly customized products. However, in other industry it becomes difficult. For instance, if an analyst were to compare Toyota Camry with Honda Civics, the latter might be less expensive, but the former is likely to have more product feature. Therefore, too many not be alike for comparison. In such cases, analysts can try and identify which product offer an end customer better value for money. This can be achieved through primarily research or by analyzing performance of the similar models in the past. Execution क्या है देख सकते हैं. Another very critical factor that helps to company to better than competition is a company ability to execute better. Company that manage to communicate better with their customer to execute a better sales strategy through a focused approach can do better than their competitors. Execution capability can be studied by looking at the past track record of the company as well as its management. Strength, weakness, opportunity, threat analysis. External environment constantly change. These changes provides new opportunity and same also create new challenge. When a new opportunity is presented, company that's all well positioned to take advantage of that, utilize such opportunity and prosper, while other miss out. Similarly, when a new challenges and threat emerge, company with a strong fundamentals survive such challenges. On the other hand, company that are vulnerable may pierce in the face of such a challenge. Understanding these factors will help an analyst evaluate a company growth potential as well as risk tolerance. For example, COVID-19 pandemic create major disruption in business with the several businesses being locked down. This is major threat. Company with the weak financial position are extremely vulnerable to the lockdown. However, company with a strong financial position might be able to survive the lockdown. SWOT analysis is one of the popular framework that can help an analyst evaluate business fundamental. SWOT is an acronym of the strength, weakness, opportunity, and threat. Strengths and weakness are initial to company while the opportunity and threats emanate from external conditions. Analyst can approach SWOT from two sides, identify the strength and weakness first, and then identify what opportunity they can exploit and what other threats for such company is vulnerable. Alternatively, the analyst can identify opportunity and threat first and then identify what strength of the company will help them exploit the opportunity and what weakness make them vulnerable to external threat. The first approach is suitable for company when they are deciding their strategy. However, for an external observer like an equity analyst, second is more suitable. Further, in a typical EIC framework, as the analyst study the external condition first and then a study of the company. The second approach falls more in the logical order of things. Four aspects details below. Strength. Strength refers to internal capability of the company that's allowed to exploit external opportunity. Peter and strength of a company include the following: a strong financial position, high valuable intellectual property, low customer concentration, low cost or high margin, support for parents, company or government, a strong execution capability and track record. Weakness देख सकते हैं guys, weakness refers to the internal issue that make company vulnerable to external events or prevents it from exploiting an available opportunity. Source of weakness of a company including the following: weak financial position, high fixed cost, low margin that can easily turn negative in case of slowdown, higher customer concentration, significant legal case that can distract the company focus or that have potential to cause losses, lack of experience in executing a particular strategy or in operating a particular environment. While identifying strength and weakness, analysts should focus on those strengths or weakness that are related to the opportunity and threats. For example, lack of experience in self-driving car can be weakness to an Indian automobile company if there are catalysts in the industry that likely to fuel the growth of such cars. However, if no such opportunity is likely to exist in foreseeable future, then it may still be weakness but not of immediate relevance. Similarly, a sequential decline in revenue profit is not weakness unless it is likely to make company lose out on a new business opportunity, make it ineligible for a loan, to create any other vulnerability. Although SWOT analysis is a very good framework, analysts should be worried that an outsider they may not be able to identify all the strengths and weakness of the company. For instance, no company would publicly disclose the clout they have in government of the strength of their lobby. Similarly, if a company has been internationally hiding their financial woes through the creativity accounting, it is not easy for outsider to identify such a fraud. Opportunity देख सकते हैं guys. Opportunity are created through external environment. Opportunity come in myriad way and hence it difficulty to list all of them. However, the following can be indicative list of opportunity. Certain events can create opportunity for faster growth. Occasionally, some events occurs that creates an inflection point in the growth curve of one or more industry. For example, if a new battery technology become available, it can create faster growth opportunity for electric vehicle segment. Similarly, post COVID-19, some companies across the globe have shown interest to move their production or procurement outside of China. This gives opportunity to various manufacturing companies across industry outside of China grow their business fast. New business opportunity may arise on account of technological advancement, changes in regulation, or any such factor. For instance, When a Company Act 2013 are implemented, many consulting firms got an opportunity to offer service to implement the provision of new law. Financial 2K problem created opportunity for various Indian IT service providers to offer maintenance and upgradation service to their client. Company may also get opportunity to expand geographical footprint. Some geographical location may be out of bound for some business in there due to a strong capital control regulation. Poor market opportunity, however, when the conditions change, it presents an opportunity to expand into new territory. Adverse market condition can throw opportunity for consolidation. For example, when Jet Airways suspended its operation in April 19, it created opportunity for other airlines to increase their market share in industry. Similarly, is necessary economic condition, lower price of share and low interest rate can provide opportunity for a stronger player to acquire other players in the industry. Threat क्या है? Threats are essentially risks that comes from external environment. While an analyst assess the threat, it is very important to discussing threat coming from external environment to risk on account of internal situation. For example, high customer concentration is risk for a company. However, since it is internally to the company, it is weakness, not the threat. Threat also comes in myriad ways. In fact, events that create opportunity for an industry may create risk for others. Some of the possible sources of the threat include the following. Economic recession can cause significant decline in the fortune many business. Regulatory headwinds can also create threat. For example, if government moves banning single-use plastic that can act as a threat for manufacturing of such product. Technological disruption that favor one industry can be threat to other. For example, while artificial intelligence creates many new opportunity, it is threat for the BPO industry that is involving in doing repetitive tasks. Deregulation of the industry can remove entry barrier and can create threat of increased competition. For example, when Reserve Bank of India decided to offer one-stop license to new bank, it create risk of increased competition for the existing bank. While identifying threats and weakness, it is important to focus on such opportunity and threat that have responsible probability of occurring. Although there is always risk of black swan events such as COVID-19 crisis, it may not be prudent to include all possible threats, as the list would be too long to the useful. Quality of management governance structure the company are organized where ownership is separated from management while the shareholders on the company. Day-to-day management of the company is handled as separation management. Team comprising the CEO, managing director and other below. Management team reports to board of directors who are appointed by the shareholders. This separation management and ownership create an agency risk. In other words, shareholders relate on management to work in interest of the company and the shareholder. However, there is a risk that management may pursue their personal interest at the cost of shareholder or may not be capable enough to effectively run the organization. Therefore, one of the critical areas that an analyst need to evaluate during the company analysis is the competency and integrity of the management and board. However, this is an extremely challenging task. While analysis the competence is challenging, analysis integrity is almost impossible unless there is reasonable evidence. It is inappropriate to cast aspersion on anyone's integrity. Therefore, analysts should instead focus on the corporate governance structure to see if it is necessary to control in place to prevent inappropriate government action. Management competency. The top management of a company typically includes CEO, CFO, and CEO and other C-level officers. Assigning their competency is a challenging task for an analyst. The top management of the company typically have several years of experience and come from very disciplined. It is least likely that an analyst will possess the necessary skill to assess competency of all of them. However, analysts can try to find answer to the following question to be able to evaluate the top management. Do the member of the top management team possess the necessary educational qualification in relevant discipline? Although education qualification is often looked at, it does not necessarily provide definitive answer on management competency as there are many other factors that affect competency. How many years of experience do have management with higher number of years of experience is likely to have faced many business challenges in the past. Such experience likely to help them tackle future challenges relatively better than an experienced management team. If any of top management team has been in such a role of several years in any of the company, how did those company perform during the year in which they were in senior role? One of the critical data points that can provide insight on management competency can be obtained by looking at their past track record in senior position in same or in other company. However, this also may not provide a definitive answer as performance of the company depends on many factors including external conditions and role of the other managers. How long has to top management team has been associated with the company and the study and how has the company performed during the tenure? It is not necessarily the execution who perform extremely well in one company deliver similar result in another company. However, if the top management has been associated with the current company for a long time and have delivered result, then it is relatively more likely that they may be able to continue similar level of the performance. Does the management have a vision on long-term goals, a strategic direction of the company, shareholders' value is created over a long term? Thus, a company management team should be able to provide a vision for the long-term goals for the company and what kind of a strategy direction the company intended to follow. However, it does not necessarily mean the management should be informed about all their strategy to the shareholders as they may not be want competitors to know the complete details to the strategy. Do the members of the top management team have necessary experience in executing the current strategy of the company? It is not just important for the management to be competent, but they need to be competent in executing the current strategy. For example, if a company is currently focusing on innovation as a strategy, it is preferable to have someone with a proper experience in successful leading several research projects on top management. Does the company give guidance on expected near term performance and whether they typically achieve such guidance? If a management team consistently provides such guidance and have a track record consistently meeting or exceeding them, it is likely that they have better control on the business. Has the management ensure timely regulatory compliance on a regular basis? A management that is in complete control of affairs should be able to comply with all regulatory requirements well within time. When a management fails to comply with them, it perhaps indicates that they are not be in control. Further failure to meet Regulatory compliance requirement is also a red flag on the integrity of the management. Is there sufficient delegation in decision making process? If the decision making process is well delegated and is fairly broad based, it can ensure continuously even when there is a churn in top management. On the other hand, if the decision making is highly concentrated, then it creates Cayman risk as a churn in top management can derail in decision-making process. Does the company have successor plan for its top management? In line with the previous point, a proper succession management plan ensures continuity even if there is a churn into top management. Lack of succession planning can create trouble if the current management has to be replaced or any reason whatsoever. Evaluating corporate governance. Corporate governance refers to rule, process, and procedure that are followed in the management and operation of a firm. The objective of good corporate governance standard is just ensure that the company is run well to take care of all stakeholders, including shareholders, lenders, employees, suppliers, and customers. Regulatory standard on corporate governance focus on protection of the investor with additional focus on minority non-promoter shareholders. In India, SEBI Clause 49 of listing agreement set the corporate governance standard. It is important to understand that the regulatory standards are minimum standards a company must follow. Some company may set higher standards of themselves. A company following a strong corporate government standard would be able to prevent agency risk or that very less detect and effective them time. An analyst look at the following a certain corporate governance standard of the company. Board composition. The director of the company can include independent director, non-executive director who are not part of the management but not independent either, and execution director. For the sake of a strong corporate governance standard, majority of the board should comprise of independent director. Currently, SEBI regulation stipulate that independent directors should constitute at least 50% of the board if the chairman is an executive director. In all other cases, it requires one by third of the board to be comprised of an independent director. Separation of the board chairman roles and role of MD CEO. The CEO is answerable to the board of the director for effective corporate governance. It is critical that the chairman position should not be occupied by the CEO of the managing director of the company. Currently, SEBI mandate the requirement of the top handle 1000 listed company for company where it is applicable. It is also mandatory that the CEO should not be from the promoter group. Nomination competitive for the independent director. The degree of independence of independent director is likely to be high if the company executive do not have a role in their appointment. Therefore, the nomination committee to appoint independent directors should ideally consist exclusively of the independent director alone. Audit fee देख सकते हैं Audit fee independence is one of the very critical aspects of the corporate governance. For an auditor to able to truly and completely independent, it is necessary that they should not be over dependent on the fee earned from a given corporate entity or business group. Accordingly, it is important to check if the auditor's remuneration for all the service they provides to the group entity is less than 10% of their overall income. Auditor rotation देख सकते हैं. It is necessary that auditors are rotated once in 5 years. This would ensure that there is opportunity to find any fact concealed by the management in the convenience with an auditor. Audit committee composition देख सकते हैं. The audit committee is responsible for the reviewing the finance statement of the company and Nominating auditors. Ideally, the audit committee should comprise entirely of independent directors. SEBI regulation require at least 2/3 of the member of the to be independent. Related party transaction. It is important to prevent unscruples related to party transaction that can enrich promoter group or other majority shareholders at the cost of minority shareholders. Ideally, all material related party transactions should be presented to the audit committee for pre-approval. Currently, the SEBI regulation does not mandate pre-approval but require placement of all related party transactions in front of all audit committee. If the transaction is not on the arm's length basis, then the regulator also required that the company should provide justification for the same. Remuneration committee composition. The remuneration committee decided the remuneration of the director and senior management. Ideally, the committee should comprise internally of independent directors. SEBI regulation currently stipulated that all members should be non-executive director and the chairman of the committee should be independent director. Remuneration of the independent director. It is important that all the income that independent director earn from a company for all assignments are thoroughly disclosed so that shareholders can evaluate the true degree of independence of such director. The SEBI regulation has several other provisions related to the meeting of the director, various committee, and several other aspects. Good corporate governance practice should encompass all the above. However, it would be preferable if the companies follow even a strong corporate governance practice than those mandated by the regulatory. Promoter holding, देख सकते हैं guys. The concept of promoter is somewhat unique to India. The legal definition of the promoter really does not define their role. The law simply states that the promoter is an investor who has been named or is identified as a promoter. Practically, the promoter group of shareholders typically comprise of those who were part of the initial founding of the company or are part of the group of controlling shareholders. As far as other investors concerned, having a strong promoter shareholder has some positive and some negative. A promoter group of shareholders are likely to have higher level of control on the management. This in turn increase likelihood of management acting the best interest of shareholder. On the other hand, their influence over the management also creates risk for minority shareholder as a promoter. Group may influence management to take certain action, such as related party transaction that may benefit the promoter group at the cost of minority shareholder. Since promoters have significant role in a company, analysts should also focus on the shareholding they have and change their shareholding. When the promoter needs funds many a time, they may choose to place their shareholdings rather than sell them. When the promoter placed their shares as collateral, lender apply haircut on the market price toward the margin and lend money. The haircut helps the lender to ensure the value of the collateral inadequate even if the price of an asset decreases to a certain degree. Pledging of the shares may be done by the promoters as a way of raising funds in the normal occurrence, thus does not necessarily single any concern related to the corporate governance or business fundamentals. However, analysis should look at whether amount of such pledged share is high and low. High amount of pledged shares can aggregate the market risk in the event of all price of such share. This is because such a fall in price reduce eliminates the margin for a lender who may then the force they liquidate the shares, and the sudden liquidation of sizable number of shares would be likely to create a further downward pressure on the underlying share price. रिस्क इन द बिजनेस देख सकते हैं गाइस, तो देख सकते हैं कितना भी आओ है, थोड़ा ज़्यादा लग रहा है 29 तक। The risk in the business, promoter love to talk on the grand future, the dream is visualized. Very rarely would we talk about the risk associated with the journey of the converting the dream into reality. For example, borrowing from the international market at low rate looks attractive. However, the adding the angle of currency risk to discuss turn the whole discussion on its head. Entrepreneurs are by the nature risk take and have the physiological ability to bear shocks. Rupert Murdoch failed their price. He successfully created the Star Empire. Steve Jobs was thrown out of the venture. Apply his own company later was called back. In the meantime, he started another successful venture. While the businessman would be able to bear these risks, not all investors would. There are risks in very business which may range from business aspect to operational aspect to execution aspect and others. The risk may be apparent and known, on the other may be unknown. Analysts should focus a lot of risk aspect in various dimensions of the business. They should continuously ask question what could go wrong in the business. If promoter state that nothing could go wrong in the business clearly, they fall into the category of the people who don't know that they don't know. These types of promoters need to be avoided. A good businessman would be always have recognized of the risk in the business and the step that need to be taken to protect the business. तो गाइस यहाँ पर हम वीडियो समाप्त होती है और हम नेक्स्ट वीडियो में देखेंगे। इस वीडियो का हमारा ट्रेडिंग पार्टनर लेमन ब्रोकरेज फर्म है, जिसमें 0 मिलियन कॉस्ट, 0 हिडन, 0 अकाउंट ओपनिंग फी में आप यहाँ पे इन्वेस्टमेंट एंड ट्रेडिंग कर सकते हैं। इसमें आपको 4 सेगमेंट मिलेंगे: स्टॉक्स, फ्यूचर ऑप्शन, म्यूचुअल फंड, IPO, जो कि कंपनी प्रोवाइड पर करवाई रिकमेंडेशन भी गए। तो उसे डाउनलोड कीजिए और इन्वेस्ट और ट्रेड कीजिए, जिसकी रेटिंग 4.3 है। तो ये अच्छी होती है किसी भी फर्म के लिए 4 के ऊपर। तो आप इसे डाउनलोड कीजिए और ट्रेड इन्वेस्ट कीजिए। थैंक यू बाय। लेटर वीडियो इन्फॉर्मेशन के लिए चैनल को लाइक कीजिए, सब्सक्राइब कीजिए और शेयर कीजिए।